Here are the top 3 most underrated stocks of 2026. Let's talk about it. For number 1, I got Uber. Uber is currently sitting 24% below its 52-week high, leaving it in a bear market. And honestly, it does not deserve to be in a bear market. For free cash flow, which is pretty much how much cash a business has left over after they spend all their bread and buy all their resources they need for their business, they're sitting at about $10 billion, which is up 42% year over year. That's wild crazy. They've also had 5 straight years of 20% or more growth, as they just guided for Q1 of 2026 to hit 17% to 21% of growth, which is wild. Think about that. Also, if you look at Uber's daily chart, they're currently breaking out of a falling wedge, which is one of the most bullish chart patterns you can trade out of when a stock is breaking out of it. For second, I got Robinhood, aka Hood. Now, Hood's getting more disrespected than even Uber. They're down 41% from their 52-week high, which is wild crazy. They're in a super bear market, which again doesn't make sense because they're getting bread. They just hit $4.5 billion in revenue in a quarter, which is up 52% year over year. They just had a record-breaking quarter. They're also currently sitting at 56% operating margin, which means that for every dollar that they bring in after they pay out all their expenses and all that, they're keeping 56 cents, which is wild. To give y'all more context, the average operating margin for companies in the S&P 500, which holds the top 500 companies in the world, is 12%. So 56% is preposterous. That's wild. The only reason Hood pulled back, honestly, was because they're tied to crypto, because they buy a lot of Bitcoin. So when Bitcoin drops, Hood tends to drop. But that doesn't change the business model at all. They're still making dumb bread. On top of that, they're also breaking out of a falling wedge just like Uber did. So they're super bullish as far as the technical side on the charts. Last but not least, I got IGV. Y'all that don't know, IGV is an ETF, which means it's pretty much a stock that holds a bunch of other stocks. ETFs were created so that way you don't have to pick a stock. You can just invest into a specific ETF and get all the diversification that you need. Now, IGV is specifically an ETF for the software sector, meaning that they hold 117 companies that are specifically in software. Now, IGV is currently 28% below its 52-week high, which is again sitting in a bear market just like the other stocks. Now, the reason this ETF has pulled back so much is because people were terrified that software is going to die specifically because of AI, specifically an AI called Claude. Thing is though, the top 3 companies in this ETF like Microsoft, Palantir, and Oracle are having record earnings regardless of what's going on with AI. Well, this shows that honestly the whole sell-off is because people are fearful for no reason, which is usually a buy the dip opportunity. And on top of that, they're currently breaking out of a bullish chart pattern called the inverse head and shoulders. Y'all let me know if I missed any companies below in the comments. If you're looking for a specific price to get into these stocks, make sure you tap into our Discord. It's D-Wall. I'm out of here.